Welcome to the Markets and Leaders podcast. I'm Lyndsay Malchuk. Right now, markets feel electric. Capital is moving fast, sentiment is loud, and momentum is doing most of the talking. This is not cautious money. This is confident money. Information's moving fast as capital, and whoever controls the flow of that information has a front row seat to how markets are really behaving. I'm sitting down with someone who lives inside that global flow every single day. Joe Brunner, Managing Director of IR World, and one of the people who sees how international investors think, move, and react in real time. Joe, it's so great to have you on the show. Welcome to Vancouver.
Thank you for having me. And I bring the nice weather with me.
Well, thank you so much. And please thank you again for not bringing any snow from Austria.
I can bring a lot of fog, but
add that. We already had that.
Okay. I leave it at home.
Okay, that's good. Now I'm going to dive right into, there's so much I want to ask you and so much I want to pick your brain about. But the first thing is, everybody says we're in this super bull market right now, but nobody's actually explained what triggered it. So, from your vantage point across global capital flows, across investor sentiment, what actually flipped the switch there?
We must say that the super bull market started 2022. And there was many reasons for them. So it was clear that the super cycle comes always every 50 years. So we have this 50-year cycle in the resource sector, 10 years very good, 40 years bear market.
Yeah.
With bear market rallies, what we have the last 40 years. What's now brings really the attention is to Mr. Trump.
Okay.
He brings he speeded up, I must say.
Okay.
It was already in process, but now it's come to the people's mind. Mm-hmm. And the reason was simple. The last 40 years, nobody talked about resource. We have global world, we have a global economy. When we look for resources, we get it. Mm-hmm. Then COVID hit in, and we see that a globalized world brings troubles in the supply chain. Mm-hmm. Not only on resource side, on many things, medicals, whatever. We see that our system, when something happened, is running into a problem. So it was clear the start point, 22, with the bull market. The people realize, okay, we must do something with our supply chain. It's not only to looking where our food is coming, where our energy coming. It's also with where our resources coming. We have a lot of similarities like in the 70s. In the 70s, we have two energy crises.
Yeah.
This time we have one energy crisis so far. It was 22. With the starting of the war in Ukraine. We have high inflation. That's coming also with the COVID crisis.
Yeah.
We have stagflation, kind of. So we have high inflation, low economic growth. And so we have a lot of similarities in the 70s. But what brings really now or speed up the sector is Mr. Trump. He brings in our brain that resource is very important. We see this in the last few weeks. Venezuela first, mm-hmm. Greenland second, and every day it's come resource. We need to secure our resource. We need to secure our resource. So when you think of from investor standpoint, when you listen so many times in the last year, resource, then you're looking more into resource sector.
That's true.
So it's clear that the people, they are running the smart money. They say, okay, we diversify, or we must diversify our investments, and resource is one part of it. And it's not easy. It's a very small industry, we have some big players in Rio Tinto, Freeport McMoran, BHP, yes, but they are small compared to tech companies. So that's that's nothing.
Yeah.
So we have this fundamental change from that resource coming in the mind. We have the second very important thing is with Trump also comes that all the other region find out, okay, we have also a supply chain problem. So when Trump installed the tariffs, the Chinese make export control of some resources. The the red light by all the other politicians going on and say, hey, what's going on here? So it's not longer secure. So we must do something for our supply chain. Still, the European nations start funds to invest in resource and keep more security for the industry. So, and this brings me also to the bad thing. We have now 5 to 7 years positive market in front of us. So we have now really the Super Bowl market, and we will see big corrections in there. That's for sure.
Absolutely.
That's clear. When you have a spike like silver, $100 today, it's clear that we see some correction. Maybe it's come from 100, maybe it's come from 110, 120, 130, and then we see a correction of 30, 40%. But we will see big corrections also in this Super Bowl market, and this is then a really good time to invest in the sector. But we should not forget, the party is over between 2030 2032.
Okay.
And the reason is also simple. It takes time to build mines.
Yes.
Before it was always the problem, permitting. Permitting needs so long time, but permitting is a government issue. When the government realize we have a supply chain issue here, then they speed up the permitting process. European governments coming up with some regulation that when you are a special project and put a list together with a special project, then you have a fast track on the permitting side to bring this project earlier in production. But still, we need 3 to 5, 6, 7 years to build all these mines.
Yeah.
So, in 7, 8, 9 years, we have then so much mines coming to online that we have an oversupply. And this is the end of the Super Bowl market. So, and the stock exchange, but to be honest, we have 7 years ahead of us. So, and look at this last year, it was amazing. So, and we have maybe 5 or 6, 7 amazing years ahead of us. So it's great.
That's true. That's absolutely true. And I'm going to actually lean into a little bit more of what you said there. You know, the markets, they never move in a straight line. They never have, they never will. And those cycles will repetitively keep going. From what you're seeing in, capital behavior right now, how long do you think this momentum further, you said 5 to 7 years before we're going to actually start seeing that cool down? Do you think it'll be 5 to 7 years? Or do you think it'll be before that where we start actually seeing the cool down?
I think we have, in the end, 7 years uptrend, but with big correction between. For example, I would say it's very possible that we have our high in gold and silver this April, and then we have a 6 months correction. Is this a correction or is a sideward trend? We don't know it, but it's logical after this momentum what we have that you see also a cooling down phase, and then the next uptrend coming.
Right.
So we are really in this brings me to other point is we see a lot of new investors in. And the investors come from the tech sector and from the crypto sector. They know the high volatility.
And they're ready to take the risk on the high volatility.
That for them is normal.
Yeah.
So when a stock coming down for them 30, 40% is the best buying opportunity. And we will see this also in this market. So this resource market is not comparable to the rest, the last 25 years. We have new investors here. They play a total different game. We are in the same area like tech, cryptos, and we are pure momentum play. And when we have today reach over $100 in silver, it means that we get an extra kick of 20 or 30 bucks on top before the correction comes. Yeah. Gold is more serious, I must say. That's not so big from the momentum. It's also a bigger market, so it's not so easy to move. But still, when you look at only on the technical side, you see that we have potential up to 5,400 points in April is
I'm making notes. April, you said? April was?
Yeah, 5th of April.
April 5th, 2026.
Yeah.
Done. You know what, though? You said a good point, is that there's so many more investors coming from the tech sector, from, crypto and stuff like that. But that's a younger audience. And what's really starting that I've really started to really observe is that younger audience is also, because they got in with something that's more what they're interested in, it's gotten them more interested into the other sectors like mining, like biotech, all those things. So that's a really great move that even though, it feels like you're either investing in one or the other, they're starting to cross over a little bit, which is a really interesting observation.
And this comes also with the more public interest on the resource.
Yeah.
When you read, and not really say that the young read newspapers, but
is there such thing as a newspaper anymore?
That's the point. No, but when you look at the internet and you see really also then the TikTok, for example,
TikTok.
And, when you look at
Google,
when you look at them there and how many resource talks are there, it's amazing. So I see this also by my kids. They are 16 and 17, and I take them last year to one conference, and I say to them, "Look, this is a resource conference. It's boring." Old people running around, and so maybe it's not your interest. And say, "Yo, but we want to go with you."
Really?
So and they learn a lot. So I bring them. I know a lot of people in the industry, and I say to them, "Please advise my kids what they should look for. Is it the structure of the company? Is it the project itself? Is the share structure? What they must really look?" And they talk with 6-7 people. And bring some materials back from the conference and study this on the weekend. And then we say, make a decision. Okay, everybody bought 4 stocks. Amazing. What he believes is the best stock for them. And it was a great time. This was in September. So you know what happens in September. So they are really happy with them. And this is how the new generation think a little bit. So they are not taking care, is it technology, is it resource or whatever. That is more, is it interesting, is the momentum, can I do it, can I play it, and it's more gamification.
Is it on TikTok? That's really...
Maybe, yes.
I have an 11-year-old son, and I got him interested into the stock market, starting just with a silver coin. So now every day he actually goes on and he'll message me in the mornings or whatever and be like, "Mom, did you see the stock price today? Mom, what's happening?" And I'm like, this is what I want. Yeah. Start them really early and get them interested. So
and was also a little bit I see by the younger generation is more interest on economics. We not learn in the school about economics.
No, you do not.
So this is so terrible. So you must study by its own, and with the AI and with the internet and with the stock market itself, they get more interested in this field.
Absolutely. It's I think that the education system is a totally different topic. But touching on that, it's a very broken system, and I think it's very outdated. I learned a lot from Sir Ken Robert Robinson. He's a TED Talks person, but he's traveled the world. He's passed on now, but his whole take on where the education system is right now and how it's failing our young ones.
And it's always behind.
Always. But he's a brilliant mind, saying, you're taking away that creativity by pinholding them into a box. And there's so much more that's happening in the world that they need to revise.
And to be honest, AI will transfer this whole sector
100%.
Automatically.
Yeah.
So especially here in North America, when you pay for your education. In Europe, it's a little bit different. We pay not for our university, or we pay nothing for our university. But here, you must really ask your question. It make it sense to invest in me 100 or 150,000 to get a university grade.
That's per year almost.
Yeah, or I go to online university, make some AI stuff and so on, and have maybe much, much better outcome than when I go to university. Okay, networking is different thing. You don't do networking on the online.
I know, that's the thing.
But this will really change the world dramatically.
Absolutely. The times when everybody said the internet was just a fad, this is how AI is going to be. So it's here to stay. Get with it. That's it, right?
Absolutely.
So I'm going to bring this back. When money actually moves with conviction, it chooses favorites. I mean, we see it time and time again. From your perspective, watching flows across regions and sectors, which commodities are actually being accumulated right now? I mean, not hype, they're just quietly being bought.
Tough question.
Right?
But what we see is gold and silver goes for a different reason, but it's going. It's gold was money, was value storage box for 6,000 years.
Yeah.
And cryptos not catch up with them. You see this in the last 6 months. Mm-hmm. So gold and silver go for more this value storage reason. But then we have this other sectors where really you see the transformation. You have AI, what we talk. AI need a lot of materials to build up the data centers and so on, and also the connectivity of the centers. Then we have the EV change for sure. That it's a process. Then it's mean when you have all this data center running, we need a lot of energy. And nobody has a clue about how we get this energy.
No, and it's so back and forth. Is it going to be clean energy? Is it going to be traditional energy? Nobody knows, and they're fighting back and forth.
And the problem is we need both. Mm-hmm. We have no other choice. The data centers and all these new systems need so much energy that you cannot produce this with clean energy. Mm-hmm. So it's no point. So we need the old traditional energies forms like gas-fired stations, coal-fired station maybe.
Yeah, that's true.
You see also that the nuclear energy coming back.
Yes, and that's the thing. Lithium, like let's just dip into that just a little bit, because that's quietly whispering.
Yeah, I was last year on a conference and I talked with the people here what's happened with the lithium market. It was interesting to see. And they say, yeah, the big boom what we have 3 years ago was from the German car makers. They bought the whole sector out, every lithium what they can get, they bought it to any price what they
And then what happened?
And then they realized that they don't need, or that the sales of the EV cars was not so high what they expect. The conversion was too slow. Mm-hmm. And then they keep the material or have it on the books, and they need 3 years to bring it into a market. So, and there was some gas. The end of 2025, they need more lithium. The other says, okay, maybe the warehouse are off 2026. So, and I make a decision. Okay, the stock market is always quicker than the real world. So it's mean I must coming back in June, July 25 to buy lithium stocks. But I was 3 months too late. The lithium bottom was in April. Mm-hmm. And when I come back in June, July, and see that all the stocks going up 30-40%, you're running behind. You see the lithium price is not really moving. You see that the stocks are moving. You see something is happened, but you're always too late. So and that was my problem with the lithium market. I have some positions in the lithium, but not in the big ones. So in the beginning, all the big producers running like Albemarle, SQM running and so on, and they make 300-400% the last 12 months. Wow. So, but it was a little bit too late for them, for me. But we have other commodities there.
There's tons more commodities. I'm going to, naturally lead back over to the metals that everybody thinks that they understand. And we're going to go back to silver and gold. Now, this cycle, it feels different. So how do you see gold and silver actually behaving in this market that's a bit different or maybe a lot different from past bull markets?
The problem is I cannot remember the last bull market or super bull market in gold and silver, then it was in the 70s.
In the 70s?
So, and I'm old, but not so old that I can remember me on the 70s. What we always saw in the last 20 years was bear market rallies.
Yes.
So it was not really okay, maybe coming to a higher price. Yes, for sure. We see we have no all-time highs, but when you look at with inflation, it was not a new all-time high. So what we see now is we are now in a super bull market, and we have no clue where gold will end. Maybe we, as I say, in April, 5,400 for me are possible. Then maybe it's going down a little bit, but the next cycle going up to 6, 7, 8,000. We don't know it. Silver is a little bit different animal. That the point is silver has too much industry component. When we think only on the solar panels for producing energy from the sun, they have 5 to 8 gram per panel in silver in one panel. And we know exactly we need a lot of this stuff to facilitate the energy. So they can go even higher from percentage. So maybe we're going up to 250, 300 end of this cycle, 2032. So and maybe gold going up to maybe 20,000. We don't know. It depends also from the uncertainty what we see in the market. You know, we have a lot of uncertainty in the market, and from politician side, from the economical side, and so on. That's never happened in the last 30 years. I can remember.
Yes, there's so many more dynamic avenues of each one of these now. And, you know, the thing is that silver there's no lack of silver. It's just the demand is getting so much bigger. And they can't mine it fast enough. And then if you want to build a full silver thing, I mean, now you're still, although permitting is, getting better, it could still take years to get a fully permitted place.
And this is what I mean. So we need a lot of new mines, and silver is always a byproduct.
It's always a byproduct.
It's really tough. So and this is also one of the problems what we have. So we have silver components a lot with copper, lead, and zinc. So and there's no really poor silver mine out there. So and this shortage which we have was also related on the other commodities like lead and zinc. So but silver is a great commodity, and what we also should not forget is we have so much money out there. The money looks for investment. When I look in Europe, and we look, especially I'm from Austria, and I'm looking what our people's money, or where is the money from our people invest. And there was a last study from November, December last year. The Austrians have around 950 billion euros on value or assets sitting by side, and 400 billion of them sitting on normal account with no interest on it. So and this is a little country like Austria. So when a little money with the younger generation moving from zero interest account to the stock market, then you have a lot of volume coming into a market, was really can drive. I never saw a market like this last year, an overall market where we have so much uncertainty, and at the same time we have so much performance in the stock. So it's not logical. And I don't know, uncertainty means always the stock market is going down, the people going to bonds or whatever. But the realized bonds are not secure. Government bonds are maybe the next big issue. And they are looking for investment. And the bond market itself is bigger than the stock market. So when a little bit moving to the stock market, it makes a huge difference. And then it comes to a small resource sector. The resource sector is little tiny sector.
100%, yeah.
So, and when a little money switch over, I think still when you take Nvidia, you can buy with the value of Nvidia the whole resource sector.
Yes, that's very true.
So, and then you have only a single stock, a single tech stock, and you can buy all the big ones, all companies.
Do you think Nvidia is going to keep going up? Do you think it's going to correct? What do you think
I think Nvidia is close to the top.
Yeah.
I don't think that we see a big correction in it, but for me, it's not an investment case.
There's so many components to it, though. It's not just one thing. There's so many different things that go into that people can look at going, what makes Nvidia? Let's look at all of it and really break that apart.
Look at the point is also that they're sold out for the next 12 months. When you're sold out for the next 12 months, so where the growth coming?
Yeah.
You know exactly what your revenue will be in the next 12 months. So there's no excitement here.
There isn't, but there is something for investors to know exactly. I mean, there's continuity there for the next 12 months so that, if you're looking for a comfortable investment, it's not interesting anymore.
No, absolutely. And you see it in the last 6 months. So you have no performance in Nvidia. You have no performance in Microsoft. You have no performance in Oracle and all the stocks. And the reason is also simple. These stocks was so overvalued. And the software companies run in a different problems. Before it was a software company, and the software companies have low capex. Now they move all to the cloud business, and this is high capex. So Microsoft, I think, invest $100 billion last year in the data center. So what this mean, $100 billion? In 5 years, you can do it again. In 5 years, you have old hardware you must invest again.
Yes.
So and so they're coming from low capex to high capex business, but they get the valuation for a low capex business with high margins, or 80-90%. And this is not possible with the new AI business what they're planning.
My gosh.
So and technology, I think, have always a part in the portfolio, but you should be careful what you're doing with.
Yeah.
And for Nvidia is for me not a thing. One tech companies they are really interesting for me, and I'm already bought in is Amazon and Google. They have a different mindset. Is not possible to say, but they are closer to, or they get more profit out of AI. When I take an example, Amazon can use AI to facilitate the customer better ideas what they maybe should buy next. Before maybe the customer know that he need this, Amazon know it. And then they're coming up with ideas. So he is a clear big profit out of this AI business. And in general, I think AI is something like the railways industry 150 years ago.
Right.
The railways built the railways, but and they make good profit on it, yes. But the guys who use the railways to bring their products in different areas, there was really the guys who make the profit out. And the same is with AI. Companies, they have a lot of data. For example, a pharma company, when you run phase 2, 3, and this kind of stuff, they have so much data, and AI can analyze this data much better, faster, with better outcome, and they have a clear profit on it. And I can buy these stocks at the moment really to a great valuation. So PE ratio of 10. 11, 12, 3, 4, 5% dividend. And this makes for me much more sense. That is AI, or they are the companies, they are really take profit out of AI indirectly, not directly like Nvidia. That they are they make the profit out of the data.
That's very important right there. There's companies out there that are looking at like Netramark. Netramark's on the phase 1, phase 2 side of medical testing, and they're doing phenomenal things.
Absolutely.
And yet, the market's still going, sorry, what? And then there's companies like GameSquare in the tech place, and they're huge moves in, video games and stuff, like huge moves. And the market's still going, sorry, who? Those are two companies right there that people definitely need to be kind of taking a closer look at for sure.
Absolutely. And I met the
Netramark?
Yeah, Netramark in last November. It was really a
phenomenal,
really great thing what they are doing, and it says exactly that what I'm thinking, that these companies are with the big partners, what they are working on this project, they are really take the profit of AI.
100.
And the market only says, okay, the companies, they are really knowledge for AI. So that's mean the big ones, the Microsoft and ChatGPT and so on. But in general, I would say the companies, they use AI for their own products will make the big profits.
That's right. Absolutely. Now, before we wrap up, here on Markets and Leaders, no episode is ever complete without doing a little fun game to kind of wrap it all together. So,
why you don't tell me this?
No way, I'm not going to tell you this. This is a great part. So this game, we call it Rapid Round. Rapid Round, okay? 5 or questions. So this or that, okay? No hard thinking. Straight shooter instinct.
Oh.
And always a little sprinkle of wit in there as well. Okay? Are you ready?
No.
Okay, Joe, here we go. Physical gold or paper gold?
Physical.
Why?
Paper is paper.
All right. It's flammable.
Yeah, it's flammable. And you must trust the people they are behind the paper.
Okay. Good
so when it's come really to a problem, then paper have no value.
Okay. Next one. Cash on the sidelines or fully deployed capital? Ooh, stumped you.
Oh, this is a tough question. Cash on the side is always good.
Okay.
You have something.
Okay.
But only for small amount, what you really say, okay, this is for some purpose, some emergency thing, but not more.
Okay.
Rest is invest.
So you're going to do fully deployed. Fully deployed. Okay. Number 3.
Oh.
Institutional money or retail momentum?
What we see at the moment, I think more... I think more retail momentum in the smaller ones.
Okay.
In the bigger ones, we see more in institutional investment. But for the small caps, I think much more retail investment. For the institutional, small caps are too small. Especially in this industry, what we are, that's too small for them. So they start to thinking of 1 billion, 2 billion when the market cap is. So I would say in the resource sector, in the smaller cap sector, pure retail, when going up over 3, 4, 5 billion, we are more institutional.
Okay. 2 more.
2 more.
Okay, here we go. Energy metals or precious metals?
Both.
Both? You can only choose one, Joe. This is great.
No.
You don't see it, but there's a little bead of sweat there. Why do you say both?
both make sense.
And what factors? Break that down.
Both are in the super bull market.
Okay.
So, and I'm a fan of diversification. And diversification means also not invest only in the resource sector.
So true.
So
diversify.
Absolutely. In all areas, what we talk about,
Yep.
tech or what we talk pharmacy or something, or a pharma company and so on. This is very important that you have a well-diversified portfolio. My problem is now that the resource sector is going so far. And I have really a big portion in the resource sector. It was around 20-25%, but now it's going up to 50-55%.
Mm-hmm.
It was not that the other sectors are not really performing. The problem was that the resource sector is performing so well. So that's bringing it up to everything. And we as old-timers in this market, we have one big problem. We grow up in this bear market, in this 40-year bear market with this bull market. And the biggest risk what we have in the resource sector is to sell too early.
Oh.
But we saw this in the past. We have 6 months of sunshine,
Yeah.
and then whoop, collapse.
And that's where people,
So and when you are from the industry and you have always the same situation that it's going up and boom, hem you down, you think always, this can happen now. But all this positions what I sell so far was too early. But sometimes you need cash also to make new investments,
And you haven't learned.
Yeah, but I try.
Okay, last one.
Yeah.
Ready? Transparency or speed?
In which case?
Okay, so let's look at a junior mining company. They have a lot of news flow coming out. Every single day they're there. But the speed of which things are being executed, maybe not so much. Or would you rather the speed of things being executed that they are not able to do as much news flow?
I personally prefer more the companies that do it more transparently.
Okay.
That you see what they are really doing with the money. They make more the serious job. But you can a lot of money with the speed company.
That's right. When they perform quietly and just come to the surface once in a while, that's also a good thing too.
Yeah, absolutely. Yeah. So, but I'm a long-term investor, so I like more this really constant news flow on a regular basis, but they speed up the project. That is more the point.
Well, thank you for playing our game.
Can now I ask a question?
Okay. I've never been in the hot seat. Oh no. Okay.
No, but you are also you know a lot of people. And do you see some change on the mindset? Do you see some change on the behavior of the market? What they think? Or is it still the same mentality what they are running around? Or?
When I first got into this, there was a lot of people that were very much sitting on edge, like where are we going to get this next? How are we going to do this? How are we going to deploy this? Where are we going to get the cash? Everybody was still very much like this. Now you flip over to, probably summer last year. If we remember, the summer last year was an incredible summer. It was still very, very busy. And by the time we got to Beaver Creek, which was probably
end of September,
we were there and, we had that magic suitcase going, okay, we'll invest. We're here. We're ready. And that whole mind shift literally shifted to, we're actually good. We're good. We're not sitting on edge anymore. And there's a saying that I definitely live by, and it's be the rose, not the bee. And what that means is a rose stands very strong and the bee comes to it. So a lot of these companies, they're not, the way we talked about it, they're not sitting there screaming and yelling all of these things. They're doing the work quietly behind the scenes and gaining the momentum as the rose, that the bees are now starting to come to them. And it's a really inspirational situation to be in, to see these companies that were once so tight and tightly held onto everything, to see them release a little bit and just stand in their confidence. And it's a beautiful transition to see. And I really hope that continues forward for sure.
Mm-hmm. But you don't see too much optimism here or that they are that they're going too aggressive, not into the market is not the right word, but we see on one of the last bull markets, 2006, 2008, a lot of, we call it lifestyle companies. So where the money flows not into a project, it flows to something else.
Yeah. So
do you see that this mindset's coming back, or do you see more, they are really work on a constant base?
They're really, it's still very constant. We're going to stay focused on this. You see a lot of them now starting to shift as well, where we're not just going to do just gold. We're going to do. So they're venturing out a little bit, but what I'm seeing is they're still super focused just on what's in front of them right now. Especially in a bull market, they're going to run with what's in that market, what's working for them for sure. We'll see. It's interesting times.
Absolutely.
Yeah.
Absolutely.
Well, thank you so much for sitting with us. Definitely come back, because I think there's so much more we could talk about.
Absolutely, and thank you.
And be ready for more of our on-spot games.
Oh. Now I'm prepared a little bit.
Now you know what to expect. Again, that was Joe Brunner, Managing Director of IR World. Now you can find them on the IR World trading platform under ticker IRW and online at irw-press.com. Now here comes the fine print. These are the opinions of our own with possible vested interest in any or all of the companies we speak about. So always be sure to speak with a licensed financial advisor and know your own risk tolerances. This is not to be used as financial advice, and for a copy of our complete disclaimer, head over to apaton.com. This is the Market and Leaders podcast, where real market conversations happen before they become noise, where signals matter more than hype, and where perspective beats prediction. I'm Lyndsay Malchuk with Apaton Media. We'll see you on the next episode.